As per the media narrative, a significant challenge regarding the short squeeze revolves around the fact that individual investors aren't holding sufficient shares, while short sellers aren't increasing their short positions in AMC stock. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert: this is not a financial advice video. To elaborate, currently about 10% of AMC's available float is held by short sellers based on their estimates. In the short term, it's expected that the stock has limited downside, but conversely, the potential for a squeeze is also restricted. According to their analysis, the risk is relatively straightforward. Unless there's a noticeable shift in this balance, the stock might remain stuck with lower trading volumes, consolidating at a lower level. Recollections of the past underscore the scenario. Some may remember when TD Ameritrade reported short interest exceeding 40%, or when over 40% of the float was held by short sellers, sometimes even surpassing 200 million shares. However, the plausible theory presented here doesn't hold up when considering the historical context. Even with a significant portion of the float owned by short sellers or placed on loan, majority of it being in the hands of institutional investors, the narrative is contradicted by consistent confirmations from the company itself, indicating that at some point individuals owned 80 to 90%. Additionally, there's speculation that individual investors are frequently buying AMC stock. The evidence lies in comments and screenshots showing purchases during almost every dip. One point of agreement is the desire to witness higher short interest and increased shorting of shares, as well as higher borrowing costs. These factors could potentially set the stage for the sought-after conditions by those anticipating a short squeeze. Drawing parallels to GameStop's history, it's notable that despite being shorted for years prior to the events of 2021, the peak in actual price action occurred when the stock was shorted by over 120%. This highlights the importance of this setup and validates the decision to share a specific article discussing it. This particular article is a rarity in the current media landscape, still focusing on the potential for a squeeze amidst a sea of narratives emphasizing fundamentals, the company's balance sheet, revenues, and the overall industry landscape. It's concerning that these highlights shift away from the essence of the squeeze, potentially leading people to forget the initial reasons for their investment in the stock. Fundamentally, it appears that the intention is to redirect attention towards the normal price action of an average stock, attempting to keep investors content. However, it's essential that investors retain a clear memory of their initial motivations for investing in this stock, especially since their expectations haven't been fulfilled yet. Concrete data supports these observations. For instance, in the last month, a substantial $3.7 million worth of AMC stock changed hands between buyers and sellers. A mere 5 trading days into September 2023, an astonishing $1.5 billion had already been exchanged. This underscores the emotional nature of AMC's trading, emphasizing that it's driven more by sentiment than fundamental valuation. All in all, it remains crucial that investors recall their expectations, price targets, and personal investment strategies associated with this particular stock. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.